TV18.
First tick that you're seeing on the index and looking pretty good. There's a century straight off the back.
The Nifty is inching towards it, but you pull up that intraday chart and you would see the first rally on the Nifty has been sold into.
Continues to see an up move, 107 points higher on the Nifty. We've seen some, it's actually been consolidating around that range.
We're off by 20-30 points from the day's high, but just look at that. I mean, I think, you know, it'll tells you how strong and steady it has been from the time that we started this particular trading. We'll end in the green, about 20-30 points off the high.
Hello and welcome to Markets Today, the show where we track around 6 hours of the day's trading action in just 5 headlines. I'm Nigel D'Souza. Here are the headlines for the day. Strong global cues boost the Dalal Street. The Nifty and the Sensex hit 5-month highs. The Nifty Bank and the mid-cap index scale new peaks, ended record highs. India overtakes France to become the world's 5th largest stock market with a market capitalization of $3.3 trillion. ONGC, though, was one of the top losers on the Nifty, falling over 2% after a weak showing in Q4. This as the firm reports a loss of around 250 crore rupees after providing for a one-time of over 9,000 crores in tax disputes. Mahindra and Mahindra, though, was the biggest gainer on the Nifty, up closer around 3%. The management told CNBC-TV18 that the SUV industry will grow at over 10% and Mahindra and Mahindra will do better than the industry. Adds that there is some stress at lower price points in the passenger vehicle space. Balkrishna Industries gets knocked back, down close to around 7% after it sees a 32% decline in profits. Sun Pharma gains on a good showing in Q4 despite a decline in profits on a sequential basis. And Greenlam Industries surges post a solid showing in Q4. ICICI Lombard soars over 8% after ICICI Bank's board approves increasing stake in the insurance arm by 4% in multiple tranches. The bank plans to acquire at least 2.5% of the 4% by September 2024. Well, here's what we have lined up for you on the show. It's a power-packed show as always. In Market Opinion, we have Saurabh Mukherjee, founder at Marcellus Investment Managers. And in big corporate voices, we have Mr. Rajesh Jejurikar, Executive Director and Chief Executive Officer at Auto at the Farm sectors at Mahindra and Mahindra. We also have Mr. Pankaj Kumar, Director of Production at ONGC, and Mr. Saurabh Mittal, the MD and CEO at Greenlam Industries. Well, let's get straight to the day's market action then. India's equity markets got off to a strong start. Sentiment was buoyed by news that US President Joe Biden and Republican leader McCarthy had reached an in-principle deal to pull America back from the brink of defaulting on its financial obligations. The Sensex and the Nifty, they spent the day comfortably in the green, supported by a strong uptick in metals and real estate stocks. The Nifty Bank also helped as it hit fresh all-time highs in early trade. Today's rally has cemented India's return to the top 5 equity markets in the world. Remember, it had lost the number 5 spot to France in January, falling around in the Adani Group stocks. However, the recent rally has sent India's market capitalization above $3.3 trillion, and that has pushed it ahead of France, which has lost over $100 billion in market cap following an ongoing sell-off in luxury goods makers. The rally in the Indian markets, which has seen the Sensex and the Nifty gain close to around 10% each since the lows that it hit in mid-March, have been fueled by foreign inflows to the tune of around $5.7 billion since the start of April. CNBC-TV18's Prashant Nair joins us to run us through the day's market action. Prashant, what's been fueling the rally today?
It was a strong start to the week. The Nifty ending about 90 points higher. It was even stronger in the morning. It came off a little bit by about 30 or 40 points by 3:30 by close. The banks had a strong session. They made, of course, a lifetime high, earlier in the session, but did come off by just under 200 points from the day's high there as well. Broader markets, a little worse off as compared to the Nifty and the Bank Nifty, but still ending higher to be sure, both the mid-cap and the small-cap indices. Now, the bulk of the thrust in terms of gains came from Reliance, the HDFC Twins and ITC. But the biggest gainers day on day, today over last Friday, were stocks like Mahindra and Mahindra, Titan, Coal India, Tata Steel and Ultratech, which gained. In the broader markets, advanced decline was positive, but the gap closed quite a bit as the session proceeded. ICICI Lombard, where we see the stock rally 10% on the day, but it did. BHEL recovered during the course of the day. EIL, Bector Foods for the second day running strong gains. Prince Pipes, Nuclear Software, eClerks. Nucleus and eClerks were both strong gainers on Friday, so follow-on gains today. Even a name like Ahluwalia Contractors did very well. Now, in the broader markets, the losses came through in names like Balkrishna Industries, City Union Bank, GMR Infrastructure, Greaves Cotton, Phenolix Cables, and a few others as well. I mean, once you take out the new high, people project higher highs, and I think it will be instructive to see whether we get support from US markets as well. The US markets on Friday saw a very strong session. The debt deal, of course, in principle was agreed over the weekend, and a vote on it will take place perhaps sometime in the middle of this week. Will US markets sort of catch more momentum and continue to rally on? I think in the very near term, that may determine the trajectory here in India as well. Back to you.
Thanks a lot for that, Prashant. Well, today, in fact, if you booked at the word go, you would be quite happy because the markets never saw those highs that we saw in the first 10 minutes or so. Well, a good time to get you some market opinion then. Saurabh Mukherjee, founder of Marcellus Investment Managers, is betting big on banks and NBFCs. He expects them to grow well from here on. He also added that discretionary consumption stocks were seeing some bit of weakness. Let's hear out what he had to say.
I think by and large, the picture we got of India Inc. Basis fourth quarter was that by and large corporate India is humming at the moment. There are a few spots of weakness. I'll come to that in a minute. But if you look at, say, the banking sector, the top lenders, banks and non-banks are growing at 20-25%. The deal wins were uniformly strong. So if you look at sort of TCS or Infosys or indeed the engineering R&D services, one of the best quarters from a deal wins perspective. The capex cycle plays, we don't have too many capex cycle plays in our portfolio, but say if I look at L&T's order wins or Cummins' revenue growth, Siemens' order book, it looks like the capex cycle in India is humming. They've been growing their loan book consistently at 22-23% for 20-25 years. I think the last 4 years, HDFC Bank would have compounded about 4% share price compounding, in spite of the business compounding consistently at low 20s. So difficult to say that, with India's best franchises, the share price fully reflects the upside.
Well, to the second headline now, ONGC was the biggest Nifty loser after it fell close to around 2% on the back of a weak showing in Q4. The company reported a loss of around 250 crores after providing for a one-time of over 9,000 crores for tax disputes. Sonal Bhutra joins us with the key highlights. Sonal?
Yes, there is. If we strip for that also, operationally, it is a weak quarter for ONGC. As you pointed out, it was an operational loss this time around, one-time loss of 9,235 crore rupees that the company reported. It is related to some tax disputes from 2016 to 2022. But other than that as well, the numbers are looking weak. Revenues are down 6% on a quarter-on-quarter basis at 36,293 crore rupees. EBITDA is down 20% at 16,340 crore rupees, and it compares with a poll of 20,561 crore rupees. So that's a big miss there. Margins at 45% versus 53%. They have declined on a quarter-on-quarter basis versus an expectation of an increase. Losses have come in at 250 crore rupees because of that one-time loss, and this compares with a poll of 10,948 crore rupees. The internals, though not so bad, crude volumes have come in higher than estimates at 5.2 MMT. Gas volumes have come in higher at 5.3 billion cubic meters, and crude realizations, they have been flat on a quarter-on-quarter basis at $77.1 per barrel. The other operating expenditure is something that led to lower margins this time around. They are up around 26% on a YY basis, 36% on a sequential basis. For FY23, the company has announced dividend of 11.25 rupees per share, which is a yield of 6.9%, which of course is good for the investors. But overall, it was a weakish quarter for ONGC, and that's why the reaction on stock today.
Q4, a provision has been made with respect to the GST on royalty. This was an issue going on for past quite some time, and it's under litigation, though ONGC has got a different view on this. ONGC is always contesting on this, and but at the same time, since the amount was big and showing a big hurt, ONGC has provided for this in the fourth quarter. As far as crude and gas production is concerned, The crude production vis-a-vis 21-22, the decline has been stopped. This year's crude production, I won't say was up with respect to 21-22. It's hardly 0.2% or something. But gas was, yes, little less. But rate of decline of gas in last 2-3 years, we have again been able to arrest that. This year it was, I think, declined by minus 1 point something percentage. So overall, we could arrest the decline. The coming year, definitely, we expect to increase our oil and gas production. We are going to add crude oil from KG block this year, somewhere in Q3. And at the same time, we have taken measures with respect to the very strong reservoir management as well as reduction in operational losses, increase in efficiency, and we expect to increase crude oil production where we are. This year's crude oil production was around 19.5 odd million tons. We expect it to take it to 21.2 or 21.3 million tons in the year to come. That is 23-24. Similarly, the gas production this year has been little over 20 BCM. There also we want to add almost a couple of billions more.
Well, moving to the third headline today, Mahindra and Mahindra. That was one of the big gainers on the Nifty. The stock rose close to around 3%. At one point of time, it was up close to around 5%. They posted a very good showing in the fourth quarter. The firm's revenues grew by close to around 31%. The net profit jumped up by more than 22% on a year-on-year basis. Sonia Shenoy joins us to run us through details on that front. Well, Sonia, tell us about the numbers and what brokerages are making of them.
Well, thanks a lot for that. M&M was a big gainer in trade. Remember, the numbers that came in last week were very strong across both the auto and the tractor sector. And there were brokerages that, have raised their earnings estimates, have very strong target prices as well on the stock post the numbers. So we decided to put down a list of that. Morgan Stanley has an overweight with a target price of 1472. Macquarie has retained their outperform. They have a target price of 1546. Macquarie has also raised their FY24 and FY25 EPS by 6 and 7% respectively, while ICICI Direct has a target price of 1600 on the stock. Motilal Oswal has retained a buy with a target price of 1500. They say that apart from the fact that the core businesses are picking up, very well, the company has also raised their capex guidance in anticipation of strong demand. They have raised the capex guidance both for the auto segment to 9,500 crores, and they have also raised it particularly for the electric vehicle segment to 3,200 crores from 2,100 crores earlier. The management was very bullish when they spoke to us. They said that they are expecting the SUV industry to grow by 10% in FY24, and M&M could do much better than that, although they are expecting the tractor industry to grow in single digits in FY24. Back to you.
All right, thanks a lot for that, Sonia. Mr. Rajesh Jejurikar, ED of Mahindra and Mahindra, said that the SUV industry will grow by over 10% and Mahindra will do better than the industry. He added that they were seeing some stress at lower price points in the passenger vehicle space. Let's hear him out.
We expect the SUV industry as an industry to grow a little over 10% in F24, and we would, I'm sure, gain market share in the year. We are ramping up our capacities. We've already reached a capacity of 39,000 per month. I think when you hear the industry growth numbers from other peers in the industry, they talk about everything, including passenger vehicles. Since we don't play in the overall passenger vehicle space, we play in SUVs, which is now 50% of the passenger vehicle space. We expect that industry to grow at about 10%, and we would expect to do better than that.
Well, in some stock-specific action, Lupin jumped over 3% after the company announced that its subsidiary had received an approval from the Health Canada to market a generic version of Spiriva in the country. Ekta Batra joins us to run us through more details on that front. Ekta?
Thanks for that. Well, yes, Lupin is at a fresh 52-week high in today's trading session. The news with regards to Lupin, or the latest news, is that they have received approval from Health Canada, which is the Canadian regulator, to market a generic version of Spiriva generic, which is basically an inhaler drug. Now, this could be read as a sentiment boost simply because the street is awaiting the approval of Spiriva generic in the US markets quite closely. Now, as of Q4 FY23, what they had indicated the markets when it came to Spiriva generic is that the US FDA has provided a target action date. So that means that there could be any kind of indication from the US FDA by July, which would be without an inspection of any of their facilities, and by August with an inspection of Lupin's facilities for Spiriva generic. Now, the latest queries raised by the US FDA are procedure related. The management has said they remain optimistic of a first half FY24 launch. Remember, it's an important drug for them. They are expected to have a less amount of competition in this drug. The gross market size of it is around $1 billion in the US.
Thanks a lot for that, Ekta. And the stock made a fresh 52-week high in today's trading session as well. We'll slip into a short break. When we're back, we'll run you through the remainder of the headlines that we're tracking for you. Don't go anywhere.
नई कार तुमने कार इंश्योरेंस खरीदा होगा एगो ऐप से नहीं एगो नहीं तो कोई बात नहीं मूर्ति गलतियां होती रहती हैं कोई जरूरत नहीं है चेक करने नहीं मूर्ति
नई कार खरीदने से पहले एगो चेक करें और 36,000 तक बचाएं।
It is often said that health is wealth, but to build good health, you need to maintain hygiene. And the foundation for proper hygiene is a clean toilet. Because when we don't clean toilets or fail to follow proper etiquette, then toilets become a center for germs. So let's make our home a healthy home by joining hands in our grand mission.
हार्पिक न्यूज 18 मिशन स्वच्छता और पानी हेल्दी हम जब साफ रखे टॉयलेट हरदम। हमारी प्रार्थना होगी स्वीकार।
Z-Black Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
Samsung Solve for Tomorrow is a national education and innovation competition. This is your chance to make an impact for India. Don't miss the opportunity to win prizes. So join the Samsung Solve for Tomorrow today.
Delivery. There is a large block. Understand in the block deal, the leading private equity investor was a seller. BHEL is buzzing in trade today, and there is an anticipation of a large order coming for BHEL very soon. The promoter entity of Adani Group, understand from sources, was on the selling side, and a large leading US-based fund was a buyer in today's block. We have confirmation of both. The promoter entities have sold and have raised 15,500 crores by selling stake in the 4 group companies, and the buyer is GQG Partners.
Tune in to NSE Closing Bell as we spot deals before they happen, decode their impact on stock prices, and help you stay ahead of the markets. CNBC-TV18. Follow the leader.
Welcome back. You're still with us on Markets Today. As promised, let's run you through the rest of the headlines that we're tracking for you. The fourth headline now, Balkrishna Industries traded down over 7%. The company saw a 32% year-on-year decline in profits. The sales volumes also fell by close to around 6% on year-on-year basis. Sonia is back with us to run us through the key numbers. Well, Sonia, disappointing set of numbers from Balkrishna Industries.
Well, Balkrishna Industries was under pressure after reporting weakness in its operational performance. Overall, if you look at it, the sales volumes were down 6% year-on-year, while the total income was down about 4%. Apart from that, the EBITDA was down about 14%, while the margins for Balkrishna Industries have fallen to 21% versus 23.7%. Nomura has a neutral rating with a target price of 2015. They say that the revenues, volume and average realizations have declined. However, the company remains quite positive for FY24. They say that there are multiple levers on margins like lower raw material costs, complete normalization of logistics costs and better hedging rate that will aid their margins in FY24.
Well, thanks a lot for that, Sonia. Well, in more earnings, Sun Pharma was buzzing in trade on the back of a good showing in the fourth quarter. The pharma major reported net profit of close to 1,900 crore rupees. That beat street estimates. However, it declined close to around 8% on a sequential basis. The managing director, Mr. Dilip Sanghvi, expects high single-digit top-line growth in FY24. He also said that they recorded sales in global specialty space. Let's hear him out.
Emerging markets accounted for about 17% of total consolidated revenues for Q4. We continue to invest in R&D, building a R&D pipeline for both the global generics and specialty business. Consolidated investment towards R&D for Q4 FY23 stands at rupees 6,657 million. We expect high single-digit consolidated top-line growth for FY24. All our businesses are positioned for growth. Ramp up in our global specialty business is expected to continue. R&D investments will continue to be 7 to 8% of sales next year.
Well, in more earnings, then NIIT reported a net loss of around 9.4 crore rupees in its fourth quarter results. NIIT Skills and Careers business is now included under NIIT Limited. Rima joins us to fill us in with details on that front. Rima?
Thanks so much for that. So NIIT Limited numbers are not comparable. The company has demerged the corporate learning group business into another entity called NIIT Learning Solutions Limited, NLSL, which will eventually be listed on the stock exchange. The company NIIT Limited will house the skills in the career business. Now that has reported a weak set of numbers. S&C's numbers, that's the skill and career group revenues, have fallen by 36% on a quarter-on-quarter basis, 26% on year-on-year basis. At the PBT level, there is a loss this time. The other business, which is the corporate learning group, which will eventually go to NIIT Learning Solutions Limited, NLSL, has clocked in a very good revenue growth, much ahead of what the street was anticipating. A revenue growth of 6% on a quarter-on-quarter basis. Year-on-year, it's a revenue growth of about 22% for FY23. It's clocked in a revenue growth of about 20%. Margins too have expanded. That said, we chatted with the management of NIIT Limited, which will now house the skills and career business, and they spoke about how they are broad-basing their revenues. So the reason why the NIIT Limited's S&C business got hit is because they used to train largely the technology companies' employees. But now the tech companies lowered their hiring. If they are not hiring, then who will the company train? 80% of their revenues used to come in from hiring the technology, training the technology companies. But now the company is looking at expanding its sectoral divergence. They've got a few more people on the board of the company as well.
Thanks a lot for that, Rima. Well, the fifth headline today, ICICI Lombard surged closer on 9% on news that ICICI Bank has decided to raise its holding in the insurer by around 4%. Surbhi joins us to fill us in with those details. Surbhi?
So that's right. So ICICI Bank in its board meeting has approved increasing stake in Lombard by 4% in multiple tranches. Now, bank said it would acquire at least 2.5% stake of the 4% before September 9th of 2024. Now, just to give you some context on this, the bank currently holds 48% stake in Lombard, and post the merger with Bharti AXA, ICICI Bank had to bring down its stake in Lombard to 30% by September of 2024. But earlier in April, RBI had allowed the merged entity HDFC and HDFC Bank to hold more than 50% stake in HDFC Life, thereby creating a precedent, following which all the eyes were on ICICI Bank on whether they would increase the stake to 50% or bring it down to 30%. Now that they have announced that they will increase it to 50%, a big stake sale overhang is gone from ICICI Lombard, and that's why it's surging in shade today.
Well, that's right, Surbhi. The overhang goes out of the way, and now they'll go ahead and increase it. And in fact, that company, ICICI Lombard, will become a subsidiary of ICICI Bank. It's a good relief rally out there. Well, moving on to a CNBC-TV18 exclusive then. Federal Bank is on the hunt for funds. Sources tell CNBC-TV18 that the bank is looking to raise capital from a large qualified institutional placement. Abhishek Kothari, he's the one who broke that story. He's joining in to fill us in with more details. Well, Abhishek, tell us, how much is the bank looking to raise?
Well, that's right. Sources tell CNBC-TV18 that Federal Bank may launch QIP very soon. Now, the size could be around 2,000 to 3,000 crore, and this can be scaled up to 4,000 crore depending on the demand that they get. So, indicative price band would be around the 123 to 125 rupees per share. Lot of interest has come in from domestic houses as well as foreign funds. Just to take the number and show the calculation, the QIP of 4,000 crore on the upside at a price of 125 per share would mean 15% equity dilution and about 18 to 19% increase in capital level or the net worth level. So tier 1 ratio can increase to 16.25% from the 13% level that they closed FY23 with, and book value will increase by 3% if at all they raise about 4,000 crore. Now, we have written to the bank, however, we are still awaiting their response on the same. Back to you.
Thanks a lot for that, Abhishek. Well, on that note, though, we'll have to wrap up on this edition of Markets Today. Thanks so much for watching.